Forget corporate buybacks being shareholder value. They're a giant legal tax loophole for the ultra-rich. Here's the move. Buybacks inflate stock prices. Those inflated shares can be used as collateral, allowing billionaires to walk into a bank and borrow cheap, tax-free cash. They never sell, they never pay capital gains. They simply borrow, live in luxury, and when they die, the tax bill disappears. Buybacks are fuel for the buy, borrow, die machine. High-speed version concluded. Now, let's unpack how this system works and why it's perfectly legal. Step 1. When a company buys back its own shares, it doesn't give shareholders cash. It reduces the shares in circulation. This makes earnings per share look stronger and pushes the stock price higher. The biggest winner is the ultra-wealthy investor who owns most of that stock. Crucially, that higher valuation does one thing. It becomes supercharged collateral. Step 2. Here's why buybacks are superior to dividends. Dividends are cash payouts. If a company pays you cash, you owe taxes immediately. But if the company simply uses a buyback to inflate the stock price, your wealth grows without triggering a tax event. That higher valuation is what you pledge to the bank. The bank sees zero risk in your portfolio. Now, superinflated by buybacks and lends you millions at near zero interest. That borrowed cash is debt, not income, and debt isn't taxed. Step 3. This is where buybacks plug directly into the wealth machine, the legendary buy, borrow, die cycle. Buy. Corporations buy back shares, inflating the value of the portfolio. Borrow. Wealthy investors borrow cheap money against the inflated value of their portfolio, living tax-free. Die. Heirs inherit the assets at today's value, the step-up basis, and all those untaxed gains from decades of buybacks are wiped clean. The tax bill officially disappears. Step 4. Buybacks are legal. They appear to widen the wealth gap and reward insiders without building the real economy. Policymakers may nibble at the edges, a 1% excise tax here, a proposal to raise it there, but until the step up in basis is closed, buybacks remain the perfect fuel for the ultra-rich tax strategy. The next time you see a company announce a massive buyback, stop mistaking it for generosity. It's not about rewarding everyday investors. It's about inflating collateral for the ultra-wealthy who turn rising stock prices into tax-free cash legally. Buybacks aren't just financial engineering. They are the fuel for the buy, borrow, die machine. And the worst thing about all of this is tax dollars may have been used to subsidize the whole thing.